Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Craig Hemke. We'll look ahead to this week, some of the economic data coming out that could be moving markets. Also discuss today what's moving markets. Seems more geopolitics, especially when you look at something like the oil price that's up about $2.50. That is the crude price. We'll also talk about what happened last week with the dollar and rates moving higher, but precious metals still doing quite well in the face of all that. Craig is the founder and editor of tfmetalsreport.com. We'll post a link in the show notes. Craig, let's talk about geopolitics because it's driving oil today. The precious metals are mostly flat. Silver's down a little bit. Gold's been choppy right around neutral, but I think the real big story is crude moving higher on the back of geopolitics. This is a continued theme over the last couple of years, though. Geopolitics always being not front and center, but right on the sidelines for all the headlines. Craig, what do you see in the geopolitical sphere out there?
Well, as we record this Monday afternoon, the news, the rumor, whatever, that hit Bloomberg and hit some of the other wires a couple hours ago was that the Israeli retaliatory attack for what Iran did last week was, quote, imminent. Now, hey, thanks for the heads up, from Iran. Thanks for letting us know by leaking that. That has moved crude oil sharply higher today. It'll be interesting to see what happens. 95% of Iranian crude oil exports go through the facilities on what's called Karg Island, Kharg. And I guess you could say there would be a military, scenario where maybe Israel attacks that. We've seen that was what their response was most recently to Yemen. Remember that? Just massive fireballs over Yemen's refineries and oil production facilities. 10 days ago, I think it was just the weekend before this most recent one. So that's Israel has shown a willingness to attack the economic infrastructure of its enemies. So I would, if I were short crude, and as of just a couple of weeks ago, we were talking about record amounts of shorts, not only in WTI, but in Brent, a lot of price forecasts talking about $45 and $50 a barrel. If I was short crude here, I'd be a little nervous. And so we'll see where this goes as the day and as the week progresses.
Yeah, Craig, we'll keep following the geopolitical scene as it unfolds, but it's definitely moving the crude market. And you'd think it would maybe be moving gold a little bit more than it has. But all things considered, the dollar has rallied and interest rates have rallied over the last week. And the precious metals still hung in there. So I'd be curious to get your thoughts on how the commodities, in particular the precious metals and maybe the base metals, are holding up in a stronger dollar environment than many were expecting.
Well, the stronger dollar is coming with higher interest rates. The U.S. 10-year notes moved back up to 4%. It's 40 base. It moved up 10%. It's moved up from 3.60 to 4% in the last couple of weeks. And those are moving up because people are saying, well, maybe the U.S. economy is not as weak as is perceived. And if the U.S. economy is not as weak as perceived, well, wait a second. Then that makes a bullish case for some of the commodities like copper, crude oil, base metals. And so the metals are kind of getting a little bit of bid from that. You remember earlier in the year, the first 4 or 5 months of the year, the dollar's screaming higher. And a lot of the metals, gold, silver, industrial metals all rallied. Copper got north of $5 a pound for a while on strong economic, projections. One thing I guess maybe we could infer from some of this other action, though, is one, silver was up last week while the dollar was up as well. Dollar up every single day last week for a total of more than 2 points, and silver was up 57 cents. Okay, so again, maybe that's a connection to the economics. But getting back to crude oil and the situation in the Middle East, I may be grasping at straws, but I was flummoxed, as were a lot of people on my site, at the weakness in the mining shares last week. GDX was down almost a full point. It's down again today as we speak. And that doesn't make sense. You're like, well, wait a second. Even the high cost producers that are, $1,500 and $1,600 an ounce for sustaining costs are making $1,000 an ounce. They're all getting ready to report in 4 or 5 weeks. Why would anybody be dumping shares here? And I wonder, could it be that people are looking at that higher crude oil price and projecting it out and seeing inflation and thinking, yeah, those costs are just going to keep going higher. I don't know. But I do know that the action of the shares the last couple of days has been perplexing and frustrating too.
That being said, though, Craig, the shares are still at a very nice level. If you look at something like GDX or even GDXJ, it's been putting in consecutively higher lows and higher highs ever since really that March turn that we saw. So any more selling could just be a buying opportunity as long as we don't break down. But a breakdown from here, even to the most recent higher low, would still be another about 7 to 8% move lower. So this isn't a breakdown that we're talking about. It's just general weakness that we're seeing.
Yeah, and that chart, like you mentioned, it would kind of augur the idea you're supposed to buy the dip, right? You look at it and you go, yeah, you're just kind of making these stair steps higher because nothing goes straight up. And as long as you're making higher highs and higher lows, that's the very definition of a bull market. So maybe that, again, you can look at something like AEM is now back to its 50-day moving average and the trend line that began back on March the 1st. So, for anybody that thinks, hey, I think the gold price is going to hang in there or move higher over the next month as we head into earnings season again, and this might be your chance to build a position, add to a position, start a position on this kind of pullback.
Well, Craig, to that point, I think the gold producers are probably doing fantastic. We'll see what the third quarter numbers are. And I don't know that the spike in oil prices will have affected the third quarter. It may affect the fourth quarter moving forward. But even the silver producers have to be making some cheddar here when silver has been above 30, a lot of times 31 and 32, even recently, but holding up pretty well for the third quarter. What's your outlook on silver and the silver stocks the way it's set up currently?
Well, and as we've discussed, guys, over the years, the clear correlation, though, I don't know how to explain it, between silver and something like the GDX, which again is major gold miners. I think the biggest silver producer in the GDX is Pan American Silver, and it checks in at only, like the number 12 or 13th weighted stock. So they got all these gold producers, but that thing tracks silver. And you can look at the chart and you can say, well, look, yeah, silver peaked out in the summer of 2011. That's when the GDX peaked out. Silver's come back. I don't know what its percentages is. It's off its highs, but GDX might be a little closer to its highs. But if you get silver to go up, that's going to float all the boats, and particularly, obviously, the silver producers. Silver is what's interesting. And I was just writing about this today. If you look at annualized gains for silver, now the chart I have and that I've been referencing on my site is the last 15 calendar years, starting with 2009. I suppose you go back further, but I don't mind starting in 2009. I mean, the kind of the paradigm shifted in 2009 with the first QE program by the Ben Bernanke and his Fed. And so, to me, the whole system has been different, hasn't been the same ever since. And so I don't mind starting in 2009. The chart that I'm currently looking at that I got from Ronnie Sturfula at In Gold We Trust is silver priced in the 9 major fiat currencies annually over the last 15 years. Maybe I'll send it to you guys if you want to put it on this post, knock yourselves out. Average annual gain since 2009, even taking in the, just that brutal period of 13 through 15, 10.3% in US dollar terms. Biggest one is out there, in the Japanese yen, euro terms. But really, most of the 9 currencies are somewhere between 8 and 13% annualized. Okay. Now, again, cherry picking dates. I mean, you could start in 2012 and you get a totally different picture. The one thing, though, that caught my eye as I looked at this chart is on years when silver has posted a double-digit return, a double-digit green gain. Every time it has done that since this paradigm shift in 2009, it has followed it up with a second big green year the next year. I don't know, maybe that's coincidence. I don't know. But in 2009, it was up 47%. 2010, it was up 83. Then we get into that period, through 15, that was just terrible. But then in 16, it was up 17%. 17, it was up 7. But still, 2 good years in a row. 2019, up 15.5. 2020, up 47.5. and then a red year, and then a green year, then a red year. And now so far year to date, silver's up 34%. So I don't know if that trend continues, and we tack on another, I don't know, 20% next year, 30%, something like that, then silver is going to move up nicely into the 40s next year. That's going to drag up not only silver miners, but as we were mentioning, the gold miners too.
So, Craig, are you seeing a better opportunity in silver then? Do you think silver does outperform gold? And even looking at something like the gold-silver ratio, currently still above 80, does that correct?
Yeah, that's the current thinking by most folks, is silver is kind of the wild card, give you some leverage versus the gold price. That when it moves, it usually moves late, but it moves in multiples of what gold has done. And again, that's a lot of what we're seeing here. Now, it's about the same as gold year to date. It's pretty close. So is it leaving some on the table? Maybe. But, unlike gold, where gold's out there making these new all-time highs, so it's kind of hard to lay out, where resistance might come in and, where would be support on a pullback and all that kind of jazz. Silver, I mean, the roadmap's just laying there staring you in the face. This area around 32 for the spot price has always been pretty important. You go back in time, 28 was a very important level of support from 2011 to 2013. Then when that gave way, I mean, it went to 18 within a period of months. So as we came up over these last couple of years, 28 became important resistance. How about that? We finally broke through, and then it became support for these last, 3 or 4 months. And now that little consolidation period, maybe a little handle period, has now been broken to the upside. So silver it projects like it wants to go another 35 or 235 or 6 here this quarter. Beyond there, you can look back at the chart from 2012 and kind of see something like 40, 41. And beyond there, you're looking at the highs from 1980, but again in 2011. You can also draw a big bull underneath the weekly or the monthly chart too. And you can see if you start in 2011, you connect it to a low somewhere on 2018, 7 more years coming back up, points to 2025 as well. So I think there's reason to be optimistic that we're going to have a good year next year too. And if that's the case, again, that implies gold's going higher, but probably even more importantly, that implies pretty good time for the shares.
Well, Craig, just following up on that longer term pattern, and some are saying it's even a giant cup and handle pattern, kind of like what we saw in gold, but like a huge one from the 1980 to the 2011 peaks. Do you think silver has the stones to get above $49 to $50 this time and actually break out to a new all-time high? That's been the question du jour for a long time, but do you think, based on the way you're looking at the technical setup, the momentum, the physical buying, that there is enough oomph to finally get silver to a new all-time high this cycle?
That's the ultimate question, right? Is there enough physical demand that it overwhelms the paper supply? That the system that we have for pricing it now, that primarily relies on futures contracts, gets thrown to the trash heap and has to be taken. That leverage gets taken out, and we find a new way of finding price. And that would come from, say, for example, this story that we all had a couple of months ago about the Samsung battery, that extends the life, the charge life of an electric vehicle by a factor of 2 or 3 up to 600 miles, and that's 400 million ounces of demand a year or whatever, things like that. If that were to come to the fore, there's just not enough silver around. That deleverages the derivative-based system, and who knows where we go. But in the meantime, it's always going to be 2 steps forward and 1 step back. And the biggest challenge that silver has right now is that on the commitment of traders report, which just simply surveys the COMEX market, if you lump together the swap dealing banks and the producers and the commercials, sell forward and that sort of thing, if you put them all and call it a commercial category, the net short position is nearly 80,000 contracts. That's 400 million ounces. That's up from, just a few months back, it was half that. Go back about a year, there wasn't a commercial short position. Everybody was pretty much net flat. So as long as there's going to be entities that are willing to sell into the rally and take their chances that price is going to pull back, or as long as there's entities that are going to sell forward their future production because they want to lock in a price now, then there's always going to be somebody on the offer, and that's kind of creates this two-step forward and one-step back pattern. So can we get to 48.50 again? Certainly. Can we get a situation, a paradigm shift, a market structure shift, a physical demand-driven shift to get us to blast through there into uncharted territory like gold? We'll see. Let's hope so. I think we're all kind of counting on it, but it's a matter of when that actually happens.
Oh yeah, and it can be a process too, but hey, it's heading in the right direction right now. Who knows what the ultimate number will be? But Craig, to your point about some of the COT reports there, one other thing I watch closely is volume for the ETFs, especially in terms of the underlying stocks. GDX and GDXJ have still been relatively low volume, but SIL has caught my eye. Over the last about 6 months, the volume has been generally higher, which I think means more people are paying attention. Anecdotally, though, from your website, have you noticed a whole lot of new interested parties that aren't always interested in the metals coming in?
No, I've not. I mean, I think any pickup in interest is more still the regular precious metal enthusiast that maybe is starting to devote more time to silver after, just feeling like you've been kicked in the teeth for so many years, wanting it to go up, watching it go up, then watching it go right back down. So I think that's where we are at present. And again, probably the most important trend over the next couple of years will be this kind of widening, building out of the tent, building a bigger tent for all, to welcome people into it that are precious metals or feel that there's a need for some precious metal in your portfolio. I cited this chart from Ronnie Sturfler earlier. He keeps track of and it's a chart that's updated by Bank of America research of the amount of financial advisors globally that have any allocation whatsoever to the precious metals. And the last time they did one of these surveys, 71% had less than 1%, to 0 to 1% allocation. 71%. If you throw on the advisors that had up to 5%, you get 96% of global financial advisors, hedge funds, institutions, retail, whatever. 96% have their clients in less than 5% allocated to precious metals and the mining shares. I mean, you just think if that gets, we get people nibbling away at the edges as a lot of money. You get a real trend where it becomes fashionable, wise to have some, one of these ETFs you mentioned, Corey, or some mining shares or some physical metal. Man, you start getting that trend to wake up. Yeah, that's a lot of money chasing a very small amount of opportunities. We're just not there yet. I think for now, we're just mainly still seeing same old usual suspects like the three of us that are paying attention and on notice.
Yeah, Craig, for now, it's still precious metals and resource investors trading amongst themselves. But like you say, just some nibbling at the edges and more generalist interest if there's a solid trend in place. So let's talk about what could drive that. What are the financial data and bullet points that you have on your radar in the next couple of weeks?
Well, in the next couple of weeks, hard to say. We're going to go through the month again like we always do with the inflation reports, and eventually we'll get all the way around to the JOLTS data again and the next jobs report, all this stuff that is going to be taking place in the next couple of weeks. I still think, though, that one of the bigger events that kind of came and went, but I think shook people by the lapels, these kind of normies that manage money in the current fashion of, chasing growth. I think one of the biggest events was that August report on the monthly budget deficit in the U.S. And they put it out every month. We'll get another one here in a week. Man, I don't think it's this week. It's probably next. And that report for August, which was the 11th month of the U.S. fiscal year, and the total deficit for just that month, just those 31 days, was $380 billion. What? And I think that was, I mean, that's a cold slap in the face, sober up, And I think some people did, because that prompted about $100 in gold, got it above 2,500 and through 2,600. And so that type of news, as that continues, especially we get into what's a recognized recession and government receipts start to fall, tax revenue starts to fall, while the spending goes up, and those monthly numbers, those annual numbers get bigger and bigger. That's the kind of thing that causes people to go, God, what can I do to hedge against this? Maybe I ought to get some gold. And that idea takes hold.
All right. Well, Craig, we'll wrap it up here. Yes, if that idea takes hold, then that will bring in a lot more money. Either way, the trend has been in favor of precious metals investors here. Yes, we can argue that the stocks have still generally lagged, but there's still a number of good stories out there. There's been a lot of M&A happening. It's a strong market still, even with some intraday weakness here and here. Overall, look at some of those charts to just break down the monthly moves over the last about really 6 to 8 months. It's been strongly heading upwards, putting in gain after gain. So as long as that continues, it will naturally draw in more investors. Craig Hemke, again, founder and editor of tfmetals.report.com. Craig, always great chatting with you. We'll chat again next week.
Thanks, guys.